and the Nifty is currently down around 20 odd points. But let's talk about the pharmaceutical space. That's been in focus on account of multiple news points in the past couple of trading sessions. Case in point would be something like a Decodes and Gland Pharma, which were down significantly in yesterday's trading session on the back of export data. And we have data coming in from the US that Tamiflu generic, which is basically a drug used for the flu, has seen shortages in the US, and hence that would probably bode well for a couple of pharmaceutical companies back home. Prakash Agarwal, Deputy Head Research Executive Director Pharmaceuticals at Axis Capital, joins in to put the focus on this space. Prakash, hi, welcome to the show. Well, let's start by talking about the flu season in the US. It's definitely a negative for patients and for people there, but it's definitely a positive for a lot of the companies here, the likes of Ajanta, Lupin, Zydus, to name a few. Can you give us a sense in terms of how much it would probably contribute this quarter and going forward?
Yeah, hi, Ekta. There is a flu season that is caught up, and it's not a January phenomena. It's actually picked up in November and December. So you would see some tailwinds in the companies that you mentioned. This would be a good tailwind, especially when the sector, especially the US generic, is seeing headwinds in terms of US FDA issues, volumes coming down, pricing remain a risk. So that would be beneficial to some of the names, I guess.
Okay, so that would be beneficial. But Prakash, the other piece of news that we were working with in yesterday's trading session were the sharp declines that we saw for the likes of Gland as well as Divi's. And there was this export data that had resulted in the downside that we've seen for the month, which would probably indicate how they could fare in Q3. While you might not discuss stock-specific action here, just wanted to understand the correlation between this export data and what we could eventually see in the Q3 numbers. Is this something which was tracked very closely?
Yeah, so export data gives you some reflection. So there is a part of the data which gets captured, but it's not always correct, but it gives you a good direction. And there is an SEZ data which is still due, so that gets added to the overall export data. So this is a good reflection, but in general, if you see these couple of stocks, they have their own intrinsic headwinds. Divi's is now, if you see, they are sitting on a very high base of last year with molnupiravir sales. So they would in general see a decline in the second half YOY. And as far as Gland is concerned, I think they themselves said that, they are going through a weak phase with a lot of shortages, especially on the syringe and stopper side. So unless those are resolved, the exports is likely to be muted any which ways.
Right. Prakash, thank you for joining in. Let's get stock specific now. We had your view coming in on Piramal Pharma. You've initiated buy with a target of 160 odd rupees. It's an interesting move that we've seen on the stock ever since it's listed at over 200 rupees in October. It's been a steady decline, and it's just the last few trading sessions we've seen a lot of brokerage action taking place out here. What do you think could be the big triggers for them? And I mean, why is it that you're betting on this one as against any other opportunity here in the space?
So as a CRO and CDMO opportunity, we as per our channel checks, that space is looking very interesting. We are seeing a resumption of global research outsourcing coming back. And as China plus one trade, which has taken longer for pharma, and especially for CDMO and CRO, this piece is picking up. November, December is a new contracting cycle, and we hear that a lot of orders, supply orders, etc., which inevitably goes to China. India is now, a big winner there. So we understand that the CRO and CDMO opportunities are coming down to India. And stock specific, I mean, the call has been like, if you've seen the stock in the last 2 to 4 quarters, they are having their own company specific headwinds in terms of attrition, supply chain issues, capacity constraint. And I think companies taking a lot of initiatives to address the same. So we believe that starting from Q3, the second half would be very strong. and it would build on to fiscal 24 with the company initiative like hiring, training, capacity coming back, freight cost coming back. So we feel that these things would reverse, the headwinds would reverse shortly.
Okay, so there is hope. Maybe Piramal Pharma is that dark horse within the entire pharmaceutical space. Would you share the same view for companies such as Divi's or Gland, which have been the significant underperformers of 2022?
No, so I mean, there is a little bit of difference between the two. I mean, I think you have to, every stock has a life cycle in terms of performing, and you have a high base as mentioned in DV. So they have to, cross that headwind of second half, and then probably we start seeing some growth in fiscal 24. But we see some headwind coming for DVs in the next 2 quarters. For Gland, as I mentioned, that they have to come across these shortage issues. But Piramal has surpassed these headwinds and now expected to start reporting good growth going forward. We recently upgraded Syngene also. So that is also on the back of the increasing tailwinds, which we can see from the CRO, discovery, development, as well as CDMO, which is more on the development side and manufacturing side. So I think every stock, pharma, apart from being top down, is also bottoms up. So we prefer names like Piramal or a Syngene versus the other.
Okay, just on that point with regards to Syngene, Prakash, I wanted to get a larger context here because Biocon has been significantly underperforming. And whereas there's a large part of the brokerage community, investor community, which continues to be very positive on Syngene. But just give us a sense in terms of why there is this dichotomy and what might actually be plaguing Biocon.
Right. No, so it's a fair question. So Syngene is a pure play CRO, and with its Mangalore facility coming in, it's also becoming a CRAMS player going forward. So it is more like an outsourcing theme that you want to play with Syngene. Whereas Biocon is a company of 3 assets largely, with the largest one being Biocon Biologics. So that's more on the play on the biologics, biosimilar trade in the US largely, with Europe and ROW, the other key markets. Syngene is only 20%, 20-25% of the overall Biocon sales. So it is a part of it, but if somebody is playing pure play CRO, CDMO outsourcing, Syngene is the stock to look for, as per our view.
All right, Prakash, thank you so much for joining in and giving us your views on Piramal Pharma itself. You've assigned that, any potential corporate action like a promoter warrant or further infusion by PE to reduce debt could be one of the triggers as well. So apart from their financial performance, we will also watch out for any of these corporate actions taking place out there. That's Piramal Pharma, virtually at the high point of trade, marginally outperforming all the other parts of the market. With that, we'll step into a short break. On the other side, we have the management of GTPL Hathway. Piyush Pankaj joins in to discuss their third quarter earnings performance. Stay tuned.